Welcome to the Investing with IBD podcast. It's Justin Nielsen here, your host, and it is Wednesday, May 8th, 2024. So thank you for joining us today. And now Arusha, who normally joins us every week, is actually taking a little break. He had some actual other work to do, meeting with clients. But I'm very happy to have with us today Jeremy C. Owens. He is the Bureau Chief Tech Editor at MarketWatch. He just launched his own podcast, the MarketWatch podcast, back in January. So this guy knows his tech, and we're going to talk a lot about AI. Is it time for AI to show us the money instead of just mentioning it during the earnings call? So we're going to get into a lot of that. But Jeremy, thank you so much for being with us today.
Thanks so much for having me, Justin.
And I should also note that way back in 2022, was it? I got to meet Jeremy in person in New York. Of course, we're both in California here. He's in Northern California. I'm in Southern California. But we went all the way to New York to meet each other. And he kind of gave us the skinny when we had just gotten bought by Dow Jones. Hey, here's what it's like being part of Dow Jones. So it was great having that kind of little hand holding at first. Let's just to kind of give people a sense of AI. Again, it's the buzzword, right? I mean, we're in the thick of earnings season. The last few earnings season, it seems like that was, if you wanted your stock to go up, it was, well, just mention AI a number of times. And that was really all you needed. And it kind of reminded me a little bit of the .com times, where you had all these companies that were just putting .com on their name, and they thought that was a business model, So can you talk a little bit about, do you think that there are similarities here? Or, everyone's making the comparison. What do you think about that? Is it justified?
Well, I got to tell you, Justin, as a tech editor at a financial news site, I have fought for years against it's just another .com boom. And it's just another .com boom. It's just another .com boom. With this one, I get it. Right. What we're seeing happen right now is that a lot of people, all these tech companies have had AI in their workflows for years. They've been trying to develop. The big breakthrough for NVIDIA happened back in 2015, 2016. So this is not something as new to tech companies as it seems like the general public came into being with OpenAI and ChatGPT. So what's happened here is that they've gone out and talked about what they're doing with AI and gotten everybody excited. And we've seen NVIDIA pop off because they're paying NVIDIA a lot of money for the equipment to use AI. And that really does remind me of the setup in the .com boom. If you go back to what actually happened in the .com boom, everybody's talking about the internet, and this is the next big thing. And then Cisco showed a lot of money from businesses buying into networking equipment to access the internet, to use the internet in their businesses. And that was the signal to the market that this is real. Right. This is actually going to happen, and it's going to be there. Now, compare that to now, where NVIDIA all of a sudden had this huge updraft last year of people buying their equipment, and everybody went, oh, AI is real. Right. The question then, and we can talk a little bit about how these technological revolutions happen in business. When we get this, basically AI is a new level of compute. Right. And so when you have that, you tend to see it in chips first, and then larger equipment that the chips go into. And that's kind of where we're at now. And then does it go? And with the .com bust, it didn't go. We didn't suddenly see everybody on the internet and all of that, here's where it's going to go, until we got the iPhone almost a decade later. And that's the question I have about where we're at now. Do we need that new form factor, especially to see consumer dollars flowing to AI, right? We're already seeing business money flow to AI, just as we saw business money flow to the internet through Cisco back in the late 90s. But the consumers didn't get there. The businesses pulled back spending when they realized consumers were not there yet. And so that was the cause of the .com bust. We are in a situation like that now, and we need to see consumers using AI. We need to see consumers paying for AI. We need to see businesses upping their spend on AI to justify where we're at. And there is no guarantee that is going to happen. So that's where I'm kind of stuck here saying we could be repeating history here a little bit, guys. We just need to see this next leg come in to see if we are or not.
Yeah. Well, and I'm going to throw a chart up real quick. This is a monthly chart of the 90s, and so as a reminder for folks that if you weren't around during that time, the 90s were spectacular. It was like, oh, this is where throw a dart, you make money, and it's just that easy. Of course, I started myself investing in 1997, and straight out of college, and didn't have much money, but I thought I was a genius, because and of course what I did was I extrapolated my returns and said, well, if I can just continue to do this for the next 10 years, I'm going to retire and I'm going to be filthy rich. Of course, that's not exactly how it worked out, just so you know. But the 90s, and I'm just going to go throw up Cisco too, because you mentioned Cisco, and of course that came out in 1990 with its IPO, and I believe it had like a 75,000% move from its first base. It was kind of a double bottom shakeout plus 3 base down here, 75,000% move. But here we are at top in 2000, and it still hasn't gotten back to those highs from 2000. And even though Cisco was still being widely used, there was certainly this level of speculation that happened during the 90s, as it was kind of like, oh, all of the things that could be possible. And I guess, is that where we're at with AI right now? Still in that, oh, all of the things that could be possible, but we haven't quite figured out. I mean, because again, like, in the 90s, we weren't thinking of phones necessarily. I mean, yes, I had my Nokia phone, strapped to my hip, but I wasn't thinking of apps. I wasn't thinking of all of those things that came along with it. So, is that what you're kind of getting at?
Yeah, exactly. I mean, it's betting on that growth rate to continue, and it's gonna be very hard for that growth rate to continue unless there's this virtuous cycle, right? Like, if these companies that are buying from Nvidia now are going to be buying this much from Nvidia every year, I'll be shocked,
Mhm.
right? It's got to take other businesses coming in and buying from Nvidia, and it's got those businesses need to show returns. Right. What we're seeing right now is companies spending a bunch of money on Nvidia gear, and investors are kind of like, okay, well, where's this investment getting us? And so they have to get to the point where they can show, here's what it gets you. And it will get you that consumer dollar, it will get you that business dollar, it will get you multiple dollars, right? And that's the question that still is there in this moment is, are we going to get to that place, or is it farther away than we expect?
Mhm. Now, just to kind of follow along with the cycle here that we're laying out. Of course, after the dot-com burst, the bubble burst, we had a 79% correction in the Nasdaq. So, I mean, phenomenal on the way up, not so much for folks on the way down. But I will say, before Apple came out with the iPhone, you certainly had 2003, there was research in motion, right, with the
Mhm.
BlackBerry. And okay, now we're doing email, via mobile. And 2007, that's when the iPhone came out, and I'm showing that on the chart here. But of course, we didn't really kind of get the we didn't get the oomph
Then
there
2008
because
happened, right?
yeah,
Like,
we had to
a few things happened in there.
yeah, we had a rough time in 2008. But again, we recovered there, and then you saw Apple come back in a strong way. And let's not forget, I mean, Apple was already doing well because of the iPod and how it was changing the music industry. So I'm just going to continue forward a little bit, because you mentioned Nvidia, and certainly Nvidia was getting a lot of attention, as you mentioned, in 2016, when it was kind of like, okay, the graphic processing unit, the GPU, what else can you do with this? I mean, it's great for video games, because that's what Nvidia was at first. It was, oh, these chips are great for the graphics for video games, but it really turned into this, what else can it do? And so, yeah, it seems like we've been talking about AI and a lot of these things that are possible for a while. So you mentioned a little bit of kind of a landscape change here, and I mean, you were talking in the pre-show a little bit about how layoffs are happening. Dividends are now happening in our big tech companies. Like, that's not something we had in the 90s. It was always about, oh, we got to put this money back into the company so we can grow.
Oh, Steve Jobs was so against
Mhm.
dividends, right? And that became kind of this Silicon Valley mentality of no, we do not send our money back to Wall Street. We keep it here and we put it into the next generation of devices. We put it into research and development. That has always been kind of the thing. But then, yeah, once Facebook and Google laid off all of those workers last year and their profit margins just exploded, they didn't really have an excuse for not establishing a dividend anymore. They're basically saying we're going to be profitable now for good. And based on their businesses, yeah, they've made a lot of profit over the past few years. And like, even before they had those layoffs, they were not unprofitable, right? Their margins got squeezed a little bit, but they still were making massive profits. And now those profits are even bigger. But that, I have always taken, and this may be, and maybe you can tell me a little bit more from your perspective, Justin. Out here in the Valley, the thought is always, if you establish a dividend, it means you're done growing. It means you're done innovating. That has always been kind of the thing that you hear.
You have nothing better to do with your money than to give it back.
Right, exactly. And it's almost an admission in part that we have reached the end. And I think there is a level there. And I think Apple is the example here. That once Apple just started making so much profit, they couldn't not give a dividend, right? Steve Jobs died. Tim Cook took over. Tim Cook was the one who made the call to reestablish a dividend, But the fact is, like, the profit Apple was making, they couldn't get rid of it enough. They weren't making acquisitions like that. I understood. Meta and Google establishing a dividend is quite different. Mm-hmm. And it shows that they expect to continue running lean. This is not part of a cycle. And that was a big question I had when the layoffs happened last year. Is this just a cycle? Mm-hmm. And are they getting rid of all these people so they can invest in AI, move some of that money to hiring AI and buying NVIDIA gear and all of that kind of stuff? Or is this a permanent change where they're going to try to run leaner? That dividend, that tells me they're trying to run leaner. And I wonder, especially with something like Google, where the onus has always been like, let's develop the next new thing. Let's build Waymo within Alphabet, right? Let's do all of this. And now I don't know if they're going to be doing that. And it's a real question. But it is fascinating what is happening here. I mean, just to boil it down to the bare facts, big tech laid a bunch of people off, made a bunch of profit, and are dumping that profit into NVIDIA gear and dividends. Mm-hmm. And how does that pay off for the future is a huge question for me. Do they get our return on investment for the NVIDIA gear? Are they able to keep their headcount low and continue to make enough money to pay off Wall Street? Those are huge questions that they've answered for us in the past year, but we still have to see the proof as we move forward.
Yeah. And I want to, as you're kind of talking about that, getting lean and stuff, of course, people think immediately of profit margins. And one of the things that you were saying is, okay, I mean, the S&P 500 had such a, look, 2022 was ugly. It was no fun to be investing in 2022. It was a bear market. And arguably, it really kind of started in 2021, but it was almost like this stealth bear for a little while. Growth was getting hit. You saw ARK K. We've talked about how ARK K being, a little bit more on the speculative side, really, started coming down in February 2021 through 2022. But a lot of this was being masked to a degree by the S&P 500, and especially in 2023, how strong it looked, and how that kind of profit margin thing, was changing. Can you talk a little bit about that?
Yeah, I think, if you put up a chart of the S&P 500 and the S&P 500 profit margin, you'll see they're correlated by about 3 to 6 months. When investors could see that the profit margin was about to rebound, the stocks went higher. Mm-hmm. And what we saw, 2021, the profit margin for the S&P 500 was far beyond anything we had ever seen. And there was a lot of calls of greedflation at that time, where the inflation was crazy and the profit margins were expanding, and everybody went, oh, these companies are increasing prices and it's all going to their bottom line, which was the case. Mm-hmm. But in a lot of cases, that was before the costs came in, right? These companies knew that they were going to increase salaries, knew that they were going to spend a little bit. They went ahead and increased prices before those costs got there. So in 22, when we saw the market really hit a wall, was when we got those costs coming in, and all of a sudden margins shrank, right? Second half of 22, we were not looking good into 23. What happened at the end of 2022 and the beginning of 2023? Big tech laid off workers.
Mhm.
And so when we saw the entire S&P 500 profit margin rebound last year, that was almost entirely big tech. And NVIDIA was a big part of that. NVIDIA really became a part of big tech last year. And their insane profit margins
Mhm.
were a huge pillow there for the S&P 500. So that is really where we are now, right? We had these greedflation margins that were out of whack with anything we have seen in all of history in 21. It looked like those were going away, which, okay, yeah, that was probably not where we should have been to begin with. But then big tech came in, laid off a bunch of workers, and rescued those profit margins. And now we have a place where Wall Street just now expects these higher profit margins. In fact, they expect them to grow even more and to
Right.
expand. And where AI fits into that, that's how AI works. And I wonder a lot about whether AI is going to drive new revenue or it's just going to drive profit margin to where you
Mhm.
can use this software to take over jobs that people are doing right now for cheaper, and you expand your profit margin, but your revenue probably isn't going to grow that much at that point. And how does the market react to that? That's a question I might have for you, Justin. What is the difference between a market with revenue and profit growth and a margin and a market with negligible revenue growth and profit growth? What's the difference there, right?
Mhm. Well, I mean, sometimes we kind of lean on the chart, in a lot of these cases, and because there are definitely times where you kind of see, oh, you know what, profit margins are, pick your indicator, pick your fundamental gauge. The market just doesn't care as much. Oh, you know what? We care more about this right now. In 2018, it wasn't as much about the earnings growth; it was about the revenue growth.
Revenue growth.
Yeah, that was if you were showing revenue growth, that was good enough. You didn't need to have the earnings. So sometimes it's the chart that we're looking at. And I would actually say that, as much as the profit margins and everything you just talked about in 2022 and 2021, we also have to remember that there was this thing called the 10-year treasury yield that was going up in a very big way, and inflation and everything else, that was acting as a backdrop, from this historically low, super low, outlier low interest rates to kind of a normalization. And again, the fears that, happen with inflation and everything like that. So yeah, well, just to kind of wrap up this segment, I want to show real quick, I'm going to go back to the NASDAQ and just kind of talk a little bit about the market here, where we're at currently, because certainly one of the things that happened with us, at least, is looking at the chart, we got a little bit negative after this big breach of the 10-week moving average line that happened on both the NASDAQ and the S&P 500, kind of really knocked this uptrend out of whack. Usually that does require recovery time. You don't just break your ankle and then go back and play basketball the next day. It's, hey, you gotta have some downtime. And just doesn't seem like maybe that's in the cards this time around. We got back above the highs of that no good bad week, and it looks more like a V shape here. Now, we could still chop around. That's possible. But right now, kind of, we have to change our thesis of, hey, we could be, slopping around for a little bit, to, hey, we could actually go back to highs pretty quickly, because we're within 1%, roughly now. So we're kind of having to shift our focus there. So despite the fact that we haven't had kind of our signal that we look for, Jeremy, is what we call a follow through day. And the reason we haven't gotten that signal so far is because even though we got 1% gains 3 days in a row, we never had volume kind of come in. And so that was something that we're kind of waiting for here. But there's stocks that are looking good. So that's one of the things that we just have to kind of keep in mind, that there's a little bit of a disconnected divergence there. But
and
when we
a lot
come back,
of that's waiting for NVIDIA earnings coming up,
yes, right.
May 22nd.
Yeah.
Right. NVIDIA is driving the market. Big tech is driving the market right now because they have provided those profit margins, because they provided the growth. So everybody's kind of waiting. Those big tech earnings we just got through were okay. But I think that NVIDIA earnings report will be a huge catalyst.
Yeah, no, you're absolutely right. I mean, last earnings season, we called it kind of the earnings season of landmines and gold mines. You were either up 20% like Meta, or you were getting, clobbered. And there were certainly, I think, more gold mines last earnings season. This earnings season has been a little bit, 50-50. It seems like you still have some, great winners, but yeah, we'll definitely, I think, have to see with Nvidia, and I mean, we've got some of the big tech out of the way, but we're not done yet, right?
No, Nvidia is the big one that's coming up.
Okay, when we come back, we're going to talk a little bit more about what this earnings season has meant for some of the big tech companies, and also what we should be looking for going forward in terms of these companies showing us the money. Stay tuned. We'll be right back. We're back at the Investing with IBD podcast. It's Justin Nielsen here, your host. And joining me this week is Jeremy C. Owens. He is the bureau chief and tech editor at MarketWatch. So, of course, when he says the Valley, just so it's clear, he means the Silicon Valley. He's not talking about the Fernando Valley or anything like that, San Fernando Valley down here in Southern California.
Maybe I shouldn't use that's the break between Northern California and Southern California.
Yeah,
Right?
exactly. You had all these people thinking Valley Girl, back in the 80s and everything. So yeah, and of course, we also got to mention that he is the host of the MarketWatch podcast on Watch. A lot of great stuff there. So Jeremy, before we kind of get a little bit more into the market and the cycles and AI, where it's all fitting in, we were talking at the break about how you're hoping people enjoy your wonkiness and how much you kind of love this stuff. How did you get into this?
Well, it was just luck, man. I've been a local journalist in the Bay Area since 2001. And I was at the San Jose Mercury News.
Is that when you started, 2001?
2001. That's right. That's right. February 2001 was my first gig. So when September 11th happened, I was hooked, right? Yeah. It was really the first time that I had experienced a need from people for news, and I had news and could provide it. And so I was hooked, and I loved news, and I loved being there to provide. I ended up at the San Jose Mercury News back in 2010, and they needed somebody to take over their afternoon newsletter on tech and finance. Mm-hmm. And, I had never really cared that much about business or finance. It had never been a thing. So that's when I first started really reading and just saying, there's a lot of hard data here that it seems like people just ignore a lot of, that there's so many numbers coming. I loved earnings reports. I loved SEC documents, right? These are things that provide a wealth of information. Yeah. Yet when I looked at the news, like most of the tech coverage was about, look how cool this gadget is. Mm-hmm. And most of the earnings coverage was, their forecast. They say this is going to happen. It was especially in tech, it was Elon Musk and we'll have self-driving cars in 3 years. And I'm just sitting there going, like, I understand the tech, and I don't think y'all are being right. And I look at these numbers, and they say a thing, and so I really wanted to focus on that and dive into that. And I saw it as the tech workers in the Valley didn't really care how their products made money. They wanted to make cool products. They wanted to make cool tech. While the people in Wall Street didn't really care how cool the tech was. They wanted to know how it made money. Yeah. So I considered myself kind of the translator in between those two groups a little bit, where I could understand the tech, I could understand the money, and I could try to get that out there in a way that could help investors understand exactly how these companies are making money, could help even the tech workers themselves. Yeah, like understand why they're getting paid, and help Wall Street kind of understand what this tech is and what the actual limitations are and what the actual financial implications could be. And so that's kind of how I understood being a tech editor at MarketWatch, just fit in that little zone in between. And it did put me in this really wonky thing where I'm sitting there talking about YouTube revenue and why Google won't give it. And then, that was one of my biggest things, is like when Google started giving YouTube revenue after I had sat there for 3 or 4 years yelling about how we deserve YouTube revenue. This is one of the most important tech platforms that has ever been developed. And we have no idea how much money it makes. And eventually the SEC pushed Google enough until they got it. And those are the kind of like really tiny things that I've really picked up on and said, this is important and nobody else is going to talk about it except us. Yeah. Right. We are those weird wonks that sit there and go, this really deserves to be out there. And Therese Paletti, my tech columnist, and I really, really pushed for that.
Yeah. Well, and it's so important too. I'm with you there with the 10Ks, the 10Qs, how much information is there. And I gotta just add there, sometimes folks, read the footnotes. The footnotes can be fascinating by themselves. Just
earnings releases too. Get down in those footnotes, man. That's where you find the layoffs, right? Like, that's where you find all the interesting stuff going on. They're trying to hide it.
Yeah, and it's so interesting because I mean, let's take Apple for instance. When they were breaking down their revenue, it was really interesting. Remember, it used to be called Apple Computer. because the bulk of their revenue came from computers. And then you could see that shift in their earnings reports when, oh, you're no longer getting the bulk of your revenue from computers. It's now coming from your iPods, your music store, now the phones. And, it just all of a sudden, computers was not where the revenue was anymore. It completely changed Apple. And you could see that in the thing. So you kind of, I think this kind of really comes down to, where is the money coming from? Where is the revenue coming from a lot of times? So that's why I kind of like that show me the money type thing. And so, to your point, I guess, where so much of this is still speculative and people aren't quite sure. They know that AI has these promises of productivity, right? That's the big thing. How much more productive a single worker can be, or a zero worker can be, and you're just having the machines run stuff. So productivity for the company. But for now, what are you gathering from these earnings reports in terms of where the money is really coming from?
Well, the money is going to NVIDIA. We know that right now. And I kind of talked earlier about the cycle that this goes through. People buy all the chips, they put that into, whatever form factor works. In this case, it's servers. Really, that NVIDIA gear is going into. So we see Supermicro and Dell selling very well. And the question is, like, is there more money on the other side? Yeah. Right. And the thing is, like, these companies are using this gear to develop software. Will they be able to sell that software to businesses and consumers well enough to cover what they're paying for all the infrastructure and make some money for investors on the other end? And that question is really going to, the first answer we'll have is from Microsoft. Microsoft was early in this with its marriage with OpenAI. It has developed this software called Copilot that it is selling seats for. So if you're a Microsoft client that buys software from Microsoft, that you've got a software salesman a year right now going, you need Copilot for this, that, and this. And that's an extra $10, $15, $20 a seat, whatever it is per month or whatever, right? And so that if companies are buying those Copilots, if they are testing it with a few employees and saying, oh, this really works and we can use it over here as well, and this is really going to help us and move out, we will see it from that. And what was really interesting about the most recent Microsoft earnings report is that they're going to start really breaking out Copilot and some of this AI revenue. And so that makes it even more of a focus. And I think that's one, like, if we're trying to figure out if this next leg of the AI revolution is really going to be lucrative, Microsoft Copilot is the canary in the coal mine, Justin. If we see that taking off, that tells us there is demand on the enterprise side for what they're developing, and we can have a little more faith in some of these other enterprise software companies that are following Microsoft and trying to get there, Salesforce and some of these others that are trying to use AI as well to increase the amount of spend that their customers are giving them. And are they going to increase that spend overall? Are they going to look for other places to cut? These are some of those things you're going to have to really watch. But just in general, is their demand on the enterprise side for the software, for the AI software being developed right now? Well, how does Copilot do? Yeah. That's going to be the answer, the earliest answer we can get, and the most important answer we will actually get this year, I believe.
And, to your point, I mean, we talked earlier about Cisco and how Cisco was, of course, the darling of the 90s, but when it topped in 2000, it still hasn't come back to that old high. I think 82 roughly is where it topped out. Whereas Microsoft, it took a long time for it to get back to its 2000 highs, but 15 years later it did. But it wasn't the operating system. It wasn't Windows anymore. It was cloud computing, right? And now it's kind of like, a lot of people are talking about the third act with AI, going from cloud computing now to AI. So, yeah.
And the question is AI going to be at the level of cloud? I don't believe so. Cloud is a brand new form factor, right? And so AI is just a better piece of software, right? A more capable piece of software. They've already been selling software. How much more revenue can you drive with this new software? And are you instead just going to charge more than your old, and you're going to stop selling the old, and then your profit margins go up, your revenues go up a little bit? Like these are the things we really need to see what they look like. And we may not know until we see exactly what that's going to look like.
Now, one other part here, and it's good that we're talking about Microsoft right here, is you now have a number of companies that are over $1 trillion in market cap.
Mm-hmm.
Yeah,
Six.
they've,
Mm-hmm.
and the S&P 500. When you look at kind of its makeup now, there used to be a time where it was the S&P 500. You had your top 500 companies in the country, and that included your industrials, your energy, your automakers, a little bit of everything, and they all kind of contributed to the S&P 500 moving. One of the things that kind of happened more recently, or people just became a lot more aware, it's kind of like, oh, here's the 6 biggest tech companies, and then the rest that kind
Mm-hmm.
of, contribute a little bit, but it's not really moving the needle on the S&P 500. Do you think that's something that needs to change? Do we need something more representative of the economy, or is that the right way to do it? Because tech is so important now, it deserves to have all the weight.
Well, it's tough to know. I mean, I really try what you're talking about here is what I have tried to use on Watch by MarketWatch, the podcast, to get across to everyday investors, right? I know the audience for this podcast is more active investors. We tend to target more savers, right? And those savers have always loved the S&P 500 index funds. Why do they love those S&P 500 index funds, Justin? Because they are diversified. There's less concern. But when you have 6 companies, I call them the trillionaires. I don't go for this magnificent 7 thing. I want numbers, right?
Yeah.
We have 6 trillionaires that are the driving force behind the market's gains, behind the market's profits, behind the market's revenue, and you're losing that diversification. And so it's a problem, not, I think, for maybe active investors. It's a problem for savers who are looking for that diversification and may not be getting it in the S&P 500, and may want to think a little bit more about some, small market ETFs, some other things to round in there to make sure you're actually diversified at this point. But I mean, the fact is, these companies are so large because they're huge monopolies, Justin.
Yeah.
And they're making the money. Right? If you just look at the standard price to earnings, and especially if you're looking forward earnings, what we expect right now, like, it's justified. It is just straight justified that these companies are worth $1 trillion, $2 trillion. I think we got to $3 trillion because of how much money they're pulling in. And so that is going to be a problem, I think, for people who really want that diversification, because you're just not getting it with an S&P 500 index fund. An S&P 500 index fund is a bet on these 6 companies and an option on the other 494 at this point. And I think everybody needs to think about that and have that in their mind as they're making their investment decisions now, especially if you're looking for the long haul.
Yeah. Well, and as you mentioned, a lot of these companies, they are pulling in so much money. And so then, sometimes it's a matter of, oh, we want to get into this other thing. We'll just gobble up another company. I mean, and I mean, you have the rumors now with Apple potentially interested in Rivian. They had their own little venture of, oh, maybe we're going to try and get into the, the car business. And now it's like, well, we could just buy Rivian because we've got,
But the FTC is going to be there anytime these big techs try to buy a company. And that's really the problem we're looking at here is where do they get that? If they can't acquire, because any acquisition is going to end up in a lawsuit, how do they add revenue, right? And how do they add revenue in the way where they've already got so much revenue that it makes a difference?
Yeah.
Right? How do you find the next Microsoft Azure, their cloud computing platform, that just hit like the gas on their revenue and they just shot up that hill you showed in your chart, right? It's because they developed that. What is the next development? Is AI that? I don't know. Like, that's kind of the thing. If you can't acquire it, you got to build it. And what's the building looking like? It's a very difficult question right now, especially with as large as these companies are. And this is especially something we talked about with Apple for a while. How do you move the needle when the needle's already jacked up in the red? Yeah. Right? With so much money coming in, so much revenue and so much profit. And we saw, they introduced the new headset, the Vision Pro, and they're trying to get into metaverse. Well, how long before you sell enough of those to actually show on the balance sheet?
Yeah.
It's going to be a long time if they ever do.
Yeah.
Right. The Apple Watch was the first big thing under Tim Cook's reign. How much money is Apple Watch really making for them now? So those are the questions that we're really going to have to see moving forward. And that's really the problem with having these companies so large. It's hard for them to get larger. It seriously is. And they've got to come up with something much more to move the needle. And I don't know if AI is going to move the needle that much.
Well, when we come back, we're going to talk a little bit more about some of these individual stocks that are making up the potential AI winners, the beneficiaries, and so on. Stay tuned. We'll be right back. Welcome back to the Investing with IBD podcast. Justin Nielsen, your host here, along with Jeremy C. Owens, the bureau chief tech editor over at MarketWatch, and of course, the host of the MarketWatch podcast. So we were talking a little bit about on the break that you were originally thinking you were going to maybe go into radio was your kind of desire, as you were a journalism major. So is this finally a dream realized for you?
I mean, that's kind of the funny part about getting into podcasting as a 45-year-old, right? When I was an 18-year-old going to college in 1996, I wanted to go into radio, but like the radio business was dead. Yeah. Right? Like, nobody believed in the future of radio. And even though print journalism, there was like a little bit of a doubt about what the internet was going to do to that. It just felt like that translated better to the internet than the radio. And then podcasts came around a decade and a half ago or so. And I was like, well, if I knew that was coming, maybe I'd do it differently. So yeah, it does feel like maybe I've landed where I was supposed to land to begin with. If I just stuck with radio when I got to college to begin with. But yeah, it's been fascinating, doing 24 years of print journalism and now trying to talk about it more than I write about it. So it's fascinating and it's fun. It's enjoyable, right? It sometimes feels like you're pulling teeth when you sit down and you have to like try to write and be very cautious and careful and say, and when you get up and you can talk about it, your true voice comes out a lot more in this format than it does, I think, in writing.
Yeah. And especially when you're bouncing ideas off of someone else, it's kind of it can be very fun.
And that's what I do in the newsroom. It's why I love being in a newsroom. It's why I love being around journalists, is being able to have those conversations. And it's something I've always been really good at. And I think, eventually the editor-in-chief was like, you have really good conversations. Why don't you go do that on the air? And so now we're talking about it live for all of y'all. Welcome to the conversation, guys.
Yeah, that's awesome. I mean, that's how our IBD live show kind of started. We were having all these conversations about things, off, on our own. And it was kind of like, people might enjoy like listening to the, some of these conversations. I got to say that, when I kind of joined a newsroom, one of the things that I enjoyed the most was the headlines that people never hear, like the jokes that are flying left and right. And,
don't put that in the system, but it's funny. Yeah.
Right. And I should also say, we should have called this the birthday episode, since you and I both have birthdays coming up this week. So happy early birthday to you. But as a birthday
Justin,
present,
I'll be partying on Saturday with it.
Yes, perfect. Yeah. My sister's actually coming down from Northern California, so we'll be and her birthday's coming up too. So it's we're gonna all be back to back. But let's get into whether or not Meta got its own little birthday surprise last earnings season, and not so much this season. So I'm going to pull up the chart here real quick. Meta, and this is just again one of those just phenomenal things when you think about it. Back in the day, trillion dollar companies didn't exist, first of all, but the big companies, they were usually kind of, we're just kind of trying to protect what we have. There wasn't necessarily a lot of innovation. And now you're seeing some of the growth of these big tech companies at a phenomenal level. You sometimes see the earnings reports, or the reaction, I should say. I mean, the last earnings season, Meta was up 20% in a day. And for a $1 trillion company, that's not chump change.
I think it was one of the biggest market cap moves in the history of Wall Street, basically.
Yeah, 200 billion. Although I think they had, I think back here, they had a larger move on the downside in terms of losing market cap. And I mean, look, this was no slouch recently with its last earnings report. It was down a significant amount. That was on the 25th, where it was
even
down
though the numbers were strong. Yeah.
10.5%. So what's happening with Meta? I mean, there's all this talk about, I mean, heck, in 2021, when they switched their name from Facebook to Meta to kind of say, hey, this is what our focus is going to be on the metaverse. And there were all of these investments in that. Well, where's the money? Where's the revenue? Where's the payoff, I guess?
Yeah, this is the poster boy for where's the money going to come from. And that's what I've been talking to Mark Zuckerberg through the computer. He can't hear me, but like, where's the money, Mark? And basically in that earnings call, he admitted we're years away from seeing a big return on this investment and all this NVIDIA gear, right? And that's really the question, because after, well, I guess Meta, but Facebook went public and there were doubts about whether it could make money off of mobile. It did. It figured out how to make money off of mobile. That led to it being $1 trillion company now, right? Every other instance where Zuckerberg has seen a technological shift and gambled on it, I haven't seen much of the money. Right? You talk about the metaverse. Whoa, the reality labs did not have a great holiday season. These Oculus Rifts are not flying off the shelves. And even if they are, the margin on that for Facebook is so small because they're trying to get people into the ecosystem. They are the trying to sell the cheap equipment to get you into their ecosystem thing. Same with messaging. Justin, if you think back to when they spent, more than $10 billion, I don't even know how much it would be now, so much of it was in stock on WhatsApp. You know how much money they make off of WhatsApp right now? Not that much, not to justify that price tag. So, there are legitimate questions about, just because Mark Zuckerberg sees where technology is heading and invests in it, doesn't mean that investment leads to big returns, right? And so that's where we're at right now with AI. He's spending money on AI. How does he make money off of AI? He hasn't really explained that too well. And he admitted in that last earnings call it's going to be a while before they do anyway. What I see is better ad products, and again, we want to talk there, like, are they making more revenue off the ads? Or are they just making more profit off of the ads they're selling because they're able to automate those processes with AI? It's going to be more that second one, right? And we're probably already seeing that a little bit. That's another reason why those profit margins are expanding at Facebook, is because they're able to use these technologies to kind of do that. I've talked to some people who really think, if you remember that Apple cut off Facebook's data access to iPhone users, and that really hurt Facebook, maybe back in 1819, if I'm remembering correctly. I would have to look back at it. I mean, one thing I heard is, like, they're able to now use AI to kind of make up that data, to kind of figure out where people are going outside Facebook and advertise to them more accurately and target them better, But again, like, they're just improving the products they already have and making them better. Is that a huge leg up in revenue? Is that a huge leg up in profit? I have my doubts. And basically, with the fact that we've seen this play out with Zuckerberg in the metaverse and in messaging, I have my serious doubts, right? But the fact is, they have a lot of equipment now. They have a lot of money. They're making a lot of money. They're paying their dividend. Their price to earnings actually looks okay. Like, there's no reason to be worried there. It's just, what are they actually going to do with these thousands of NVIDIA GPUs they got and these open source models that they're using for machine learning, for AI? The Llama 3, I believe, is the most recent one. There's been a lot of discussion in tech about how do you make money off of open source.
Yeah, I was just going to ask you about
gets
that.
to Meta. You know what I'm saying? And so there's a lot of questions moving forward about where they head here. And Zuckerberg is just basically saying, who cares? I got all the gear. I laid off all those employees. I've got hundreds of thousands of NVIDIA GPUs, and I can do whatever I want here. And I think Wall Street rightly is saying, that's great. You can do whatever you want. When does it make us money? And we'll see if that happens.
Well, now you talked a little bit about, again, with the earnings reports and everything like that, how you were kind of really, watching Alphabet, Google, and YouTube, and okay, this is a great revenue generator, but we don't know how much. Maybe it is a great one. Maybe it's just okay. What are you looking at with Google, Alphabet now?
The interesting thing about Alphabet is, we talked about Microsoft being kind of the standard bearer for actually making money on AI and through software, and through the cloud. And Meta now I've kind of outlined as like the standard bearer for, like, can you actually make money? Alphabet is basically those two things jammed together. They have this huge advertising business that they can use AI to optimize, to make more productive. They can use to improve their consumer services like search. But they also have a big enterprise business in terms of Google Cloud, which is growing very strongly. And in terms of their enterprise apps, right? I mean, just Google G Suite, right? Gmail and Docs and all of this, like you can make those so much better. So they basically got half of Microsoft and half of Meta, right? So like I'm a little more confident than Meta, but not as confident in Microsoft, if that makes sense. But it is, you know, you even think about things that what I've always talked about with Alphabet is you're getting the search business and the YouTube business and these businesses, and then you're getting options on all of these other businesses they've developed. Think about Waymo, right? With AI, what I like to say is like, what's the killer app? What's the killer app, right? And ChatGPT kind of said, hey, we're the killer app. I'm like, you're a text-based version of Siri. And Siri was never that much of a killer app to begin with. For me, the killer app of AI is autonomous driving. And Waymo, no matter what Elon Musk says, Waymo is far ahead of anybody else in autonomous driving and robo taxis. And
I was just up in San Francisco last week, and I mean, it's very. I mean, I didn't get in one. I'm not there yet, but I saw a lot of them. I mean, it's again, it's like wow, that they're all over the place, you know. So you see them all over the place, and there is no driver in there, you know. So again, this is something that takes some getting used to from you know, Orange County, LA boy here. That
hey, they're down there now too. I think they're rolling out in LA right now.
You had a kind of like a few like big splash events where like, there was something, you know, Ken Shreve did where it was like, come to the Grove and, you know, take a Waymo somewhere, or, you know, take a ride in a Waymo. So it's still in that kind of, let's introduce you to it, you know. But there, it's, I mean, in San Francisco, it's just, they're used to it already. It's not.
Yeah, they're everywhere. We've been dealing with it for a while now. Not everybody's happy about it. I'll tell you that much.
Well, and we took an Uber, and the Uber guy was like, you know, the worst part is when, you know, the protesters kind of put a cone on it, and then you're like, okay, well, now you're not going anywhere. So.
Those are the best TikToks though. They go out and put a cone in the street and it makes them stop. There's been a dude wearing a t-shirt with a stop sign on it and just standing out next to the street, putting his t-shirt up and making the cars stop. That one's been fun. But this is the thing is like Google was actually really hardcore on AI before most of these. Right. Microsoft kind of bought into AI with OpenAI, but Google's been putting massive resources to development of machine learning. Some of the scientists that were in there have published some of the best papers. Right. When NVIDIA made the breakthrough in 2015-16, it was Google, a Google scientist who put it down on paper and had one of the breakthrough papers. So I think Google is the sleeping giant here. Microsoft has jumped out in front of it because of what it's done with OpenAI. Meta has crowed all day about how much NVIDIA gear it's bought and what it can do in its Llama 3 and all this kind of stuff. I think Google is the sleeping giant here. But the question is, again, like, can they make money? Is this going to help the search business? Because when you talk about like how you make money, Google makes money off of ads. Google makes money off of search. And, you know, it's intent-based search. So when you go and you search in Google and it's going to feed you an ad for whatever you're looking for, you know, AI, the ChatGPT style search doesn't offer that as readily. It's not as useful. There's already been reports that Google may make its search function that is generative AI search function paywall. It may make people pay to use it. Right, instead of offering it for free like it does for Google search. So there's still questions there about how Google will monetize its AI efforts. But the fact that Google Cloud is growing strongly and basically its enterprise work is growing strongly tells me there's always an easy way, you know, the Microsoft way to make money, even if the Meta way to make money off of AI doesn't work in Google. There's other ways for them to make money. And then you got Waymo sitting there as like, well, we've actually developed what, you know, Jeremy Owens, take it for what it is, considers to be the killer app of AI. They actually have that and can show it. And it's not Elon Musk, you know, working up a video that intends to show. No, they're robo-taxis out on the street. Right? Like this is happening right now. So they're actually like a very fascinating case that kind of, you know, splits the difference between, you know, the show us what you're going to do Microsoft and the I don't know if I trust you Meta. Like they're right there in the middle. And it's a fascinating case.
Well, and just to kind of continue the trillionaire discussion, let's talk a little bit about Amazon, because of course, Amazon, you know, used to just be a bookstore, right? And then it kind of got into everything retail, and then people forget this is a cloud computing play too, right? It's
they're the biggest cloud computing company.
right.
It's hard to get those numbers, but from what we can see, AWS is still larger than Azure and is the largest cloud
Mhm.
computing offering out there.
Yeah, exactly. So what's your take on Amazon, and does AI change this business as well?
Amazon, again, is a company that has used these algorithms, used machine learning to plan out their business and do a lot of things. And yet they kind of got caught flat footed when everybody suddenly cared about AI, and they're just starting to get their message out there. They're just starting to get their, generative AI that is going to come through the Amazon cloud instances. Like the Amazon cloud is going to be helped by this, just like Azure has been, just like Google Cloud has been. The question is, what else can they do with it? Because their business is so different. Remember, Amazon's the only one of these companies in the consumer discretionary sector of the S&P 500. They're just a different kind of company. And the thing is, like, their sides are so different in terms of the e-commerce side and the cloud computing side. Completely different financial profiles, completely different customer bases, right? And so it's very hard. I mean, the thing about Amazon is they got caught flat-footed and now they're behind. And that's never been a place that Amazon has been, right? And without Bezos there running the joint, we now have Andy Jassy, the former head of AWS, as the CEO. How does he come back here? What does he do is a big question. And how much does he want to be seen as a follower? Right? He has gone on and done all the, here's our generative AI solutions, and we'll get out there and talk about it more. They're now the only trillionaire without a dividend. And that is going to be the thing I'm looking for from Amazon. When Amazon split its stock a year or two ago, I said, oh, they're trying to get in the Dow. Right? If we see them now come along and throw a dividend out there, it's just obvious that they're going to follow the crowd. They're going and they're trying to get into the Dow, and they're trying to be, a more mature company. I just don't know if they're going to do that. And that's a big question, but they now have a huge target on their back for investors and for activists, especially by being the only trillionaire now without a dividend.
Right.
They're, Wall Street is getting the bows and arrows out. And if they don't introduce a dividend here soon, there's going to be complaints. But if they do introduce a dividend, they're a follower, and they're just doing what Google and Facebook already did, right? So I don't know if there's a way for Amazon to win here. They're kind of stuck between a rock and a hard place. But the fact is, they continue to make money. And the biggest thing about their finances is just, are they ever going to make money in outside the US and Canada? Right.
Well,
Their international e-commerce efforts are negative right now.
Right.
And they are going to have to turn that around to actually make a big difference.
Well, that was their business model to begin with, right? It was kind of like, oh, we may never make money, we may never be profitable, but we're going to make a lot of money.
Right. Lots of revenue, we'll see, but it was AWS that changed that.
Yeah.
AWS is actually a very high margin business and makes up for the fact that their e-commerce is a very low margin business. Well, the question is now, like, how much are they going to put in? Like, every tech company now is talking about how much money they're spending on infrastructure and building out their data centers and updating their data centers and all that kind of stuff. Well, yeah, Amazon might have to do that too, and they have a lot of data centers. And if they're trying to add NVIDIA GPUs to all of those, it's a lot of money.
Yeah. Now, just on the other side of the AI question, I mean, because we did talk a little bit about productivity gains and stuff. Do you think that in the same way that, automated driving, as their automation, for Amazon, I mean, they've got a lot of these fulfillment centers, things like that. Is there the potential for an increase in margins with reduced headcount because of some of these productivity gains that they can gain from AI?
For sure. And that, what I tell people right now is that big tech is out there modeling the behavior it wants to see from every other sector, right? Lay off workers, spend more on tech, right? The example I used on my podcast last week is right now, software salesmen are going into C-suites, into executive offices, and saying, you can lay off a half dozen workers making six figures and replace them with 2 or 3 fresh college grads making 50 grand in this software, right? And what's happening right now at Amazon, at Microsoft, at Facebook, at Google is they're showing that's possible. We're doing it, right? We are the live example, and let us help you do the same thing.
Yeah.
And so, yes, I do think Amazon can do that. The question is, are they, like Facebook is kind of doing right now, are they going to take all those savings and plow it right back into infrastructure spend?
Yeah.
Right. And is that infrastructure spend going to lead to higher revenues and higher profits on the other end? Are you going to have to then rehire to get back to where you were? Right. These are the questions that are very hard to answer, that we're going to have to see in action before we actually know what's happening. But for sure, Amazon was laying off AWS employees at the beginning of this quarter. Right. They are looking to do more with less, just like all of these companies. And the reason is their true customers are businesses, that if they do more with less, it means they're going to be paying more to these guys.
Yeah. Well, hey, Jeremy C. Owens, and I throw the C in there because you do a lot of times.
That's right. There's a lot of Jeremy Owenses out there. Let me get my middle initial in there. I got to help with the SEO, right?
Yeah.
Somebody at Google that got through what I just said about them laughed at that.
So where can folks find you? What's your X handle, Twitter? Where
I am still on Twitter at Joens510 for the Oakland area code. Go A's. Let's go Oakland.
I do notice there's Oakland. A lot of Oakland A's.
I'm an East Bay kid. I'm the San Francisco
I wasn't sure
bureau
if I had
chief.
The right Jeremy Owens at first because I thought it was a sports.
Right. But I do stay in the East Bay all day, every day, and love the East Bay and love Oakland, and hope that the A's stay here. But yeah, definitely X. LinkedIn is a great place to hit me as well. Obviously, please come to MarketWatch, listen to On Watch by MarketWatch. Our podcast comes out every week on Thursdays, and we break down what's happening in the economy and in the markets and what it can mean to you and your wallet. And obviously, anything
best
MarketWatch.
Place for them to find that podcast? Just
anywhere you find a podcast. We actually do run it on MarketWatch. It is in Spotify. It's in Apple Music. It's in anywhere you might find a podcast. Just search On Watch and you will find us.
Yeah, that's awesome. Jeremy, it was great seeing you again. Thanks so much for sharing your thoughts. And I'll be watching you on Watch. So it won't be too long before I see you again. Thanks
so much for having me, Justin. I really appreciate it.
Absolutely. That's going to wrap it up for us this week. And don't forget to join us next week. Arusha's going to be back. And we're also going to have Katie Stockton on from Fair Lead Strategies. She was on a while back with Arusha. So this is going to be my first chance to chat with her. Of course, she's been on CNBC a lot as a contributor there. So it's going to be great to get her thoughts on things. So we do hope you join us for that. And thanks a lot for watching us this time. Don't forget, you can also go get our podcast anywhere that you get your podcast, whether it's Apple, Spotify, what have you, or you can also go to investors.com/podcast and go to your podcaster of choice to get the podcast there. Like, subscribe, do all of those things so you can find out when the episodes drop. Thank you so much for watching. We'll see you next week. Bye-bye now.